All right, just got out of the trade. Fantastic trade on the NASDAQ. And man, I tell you, fantastic day on the NASDAQ. Everything has been going phenomenally well in the market volatility. It's incredible. So today we're going to be going over the candle by candle analysis. I know you guys love these videos, especially based on the polls that you guys put up. If you haven't seen that yet, make sure to go vote on that. The link will be in the comments section. And then along with that, before we jump in, don't forget to like, favorite, and subscribe to the video. That way we know you like the content, and that way we know that you like what you're seeing, and we can put out more. And of course, like I just talked about a little bit there, in the comments section, make sure to type in some comments on some questions that you have. You never know, your comment or question might be the next video that we go through. Along with that, on the main page of SSFTG, you can check out the free 3-day trial if you haven't already, and you can see how we approach the markets every day, and you can see how we trade these bad boys. But without further ado, let's get into the fun stuff, candle by candle analysis. Here we go. All right, so candle by candle analysis. Looking at the micro NASDAQ, the MNQ, or the NASDAQ. I prefer the micro markets for the flexibility, but we have the 5-minute chart, and we're starting off right at the beginning of the day. Now, when I look at these candle by candle analysis video type formats, I like looking at them in usually the first hour. Sometimes the first hour and a half, depending on what's going on, because that's typically what most people are trading. And right out of the gates, we're starting off with a big gap up today. Now, it's not a huge gap. It's not like we're gapping outside or anything like that, but we are still looking at a fairly sizable gap of about 167 ticks. And with that 167 tick gap to the upside, they completed that first bar up with an extreme amount of strength. Now, you know how the first candle can go. Sometimes that first candle can be the start of a huge trend that goes the rest of the day. Other times, it completely falls flat on its face and it does nothing, and then it just sits there and reverses. So the first 5 minutes is really kind of difficult to gauge what's happening. It's usually where you want to zoom out a little bit more and kind of get a bigger idea of what's happening. And we are coming off the back of a very large gap up in a continuation. And here is where it comes into play with a lot of context. Look at what we're coming off of. Massive support, and now we're gapping higher. Okay, starting to think we're going a little bit more bullish here. It makes a lot more sense to see the buyers on the interested side than anything else. But again, it's only the first 5 minutes, so we got to give it a little bit more time. Strong start, looking for bullish continuation, maybe. And here on the second candle, we get kind of so-so, right? I mean, it is a pretty good bull bar, given that it did pull all the way back down to here, but you know, closing way up here, it could be a lot stronger. I think that would add a lot more to the bull's case. At the same time, I don't think sellers are going to be looking at this thinking, hey, definitely time to short now, right? That's not a good candle to be doing that under. So the bias is still definitely up, but you can definitely feel how it's losing a little bit of steam here. Might be that buyers are looking for a gap fill or some better prices, even just a pullback to try to come in on, considering how strong of a first 5-minute bar that is. Might just be a situation where buyers don't want to buy way up here. It would be logical in those types of contexts where you see buying pressure underneath previous candles, right? It's very early in the morning and we don't have a whole lot of structure to work with, but on a 1-minute chart or even on a 30-second chart, if you were going really fast, you'd find a swing low there that we could work off of, at least in the interim, to try to give us something to work with. Trying to buy cheap, just don't want to buy way up here. And it seems like, well, buyers agree. Nobody wanted to buy high, and it gets stuck, kind of falls flat on its face. It did try to push, really nice push to the upside, but then it started backing off, and now we have an equal-bodied candle, one tick body, really, really tiny candles back to back like that. This is the type of situation where something is going to happen, right? You can feel kind of like a compressed spring where the market is compressing down and everybody's getting their orders in. They're getting all of them filled, up, down, long, short, backwards, and sideways. But we haven't gotten the actual move yet, so nobody really knows, is it going to go up? Is it going to go down? We've got some context. I would rather be a buyer in this context, but I want to be a buyer on cheaper prices. leads me to believe that I might want to keep looking for maybe that little bit of a trap underneath, maybe a little bit more of a pullback if you're a Fibonacci trader, a 50% pullback, something along those lines, just something better, right? I don't want to buy way up here, and I love the fact that there's all these wicks down here. That's going to make it a lot potentially easier to buy a dip on the low and then carry it right back up to the highs. Definitely don't want to buy in the highs, and no seller is going to be looking at this thinking, okay, time to sell. I think everybody's sort of waiting and playing it like a range, because that's pretty much what it is. Buy low, sell high. And there's your trap low. So they trap underneath the lows, and the market pops up and closes on the highs. Giant bull engulfing candle. Now look what the buyers have managed to do so far. It's kind of a little bit under the radar, but there has not been a single bear bar yet. It's been giant bull bar, weak bull bar, well, weak-bodied bull bar, very strong bull bar, and then a neutral bullish bar, and now an engulfing bull bar, right? No bear bars to be seen yet, so there's still a lot of bullish strength in here, and obviously, buyers have the same mindset where they don't want to buy way up at the top. They want to buy cheap. So what do we think is going to happen next then? Well, we're back up at the highs. Probably not going to be very many buyers here. Now, this is also creating kind of a funky-looking little micro-channel type situation. A little bit more difficult to see, but you can kind of pick up on that little bit of sideways action that the market's trying to break out of. Now, it's very, very minuscule, but there is a reason that the market stayed inside of this. Don't know what that is yet. Could just be a big chunk of volume, but either way, this is a zone of interest. Now we get the doji, and the doji comes back and hits that same zone. And notice, if we put a box around those two bodies, where the came back to, right? It eclipsed those bodies and then popped right back up again. Now it did close as a doji. That could certainly have been better, but it is still showing that there is something happening here. Even if you weren't looking at the two bodies as a spike in channel and just looking at it as a horizontal level of support or resistance, you can see that there's obviously something going on here. And this doji, although relatively innocuous, doesn't really do a whole lot in the grand picture. For us, in this case, it actually confirms a big level of support. That could be screaming buyers on the close of the candle, buyers above it. Not a huge fan of buying above it or trying to buy a little bit of a pullback. The S&P, typically most scalpers on the S&P are going for 4 ticks, but we're looking at the NASDAQ. And if you're unfamiliar with the NASDAQ, usually the target is 10. So usually like 8 to 10. 8 ticks, 2 points, or 10 ticks, because 10 is easy and we're humans and we're lazy and easy math is easy math. So when we're looking at objectives here, we have to keep that in mind because, well, you know, if I'm going to be buying way up here, I still really don't have a whole lot of room to the upside. But if I want to buy, I could buy an offset of a scalp distance. So I can look for an offset of about 10 ticks because we're talking the NASDAQ. So if I want to be a buyer here on the close of this doji, but I kind of want a better price, I could also look to offset by a common scalp distance to see if I can get a slightly better price. Either way, this doji actually confirms a lot of information. Buyers are interested. And here's the follow-through. Very strong bull move to the upside, closing on its highs. Now you can really see that kind of spike and channel structure. We're starting to get a very clean view of what's going on here, and they're attempting to break out of the highs. It's already fairly obvious after this string of bull bar, bull bar, bull bar, doji, bull bar, that we still haven't had a pullback yet. Buyers haven't let off the gas pedal, and now we have a fairly obvious market structure with this spike and channel, and we're closing outside of it. So when you have a situation where you have a bullish anything that's breaking out above the highs, a bullish channel that's breaking above the highs of it is very difficult to sustain because you're already bullish, and now you have to increase that bullishness to hold it up even further. It takes a lot of effort to get that job done, and this is usually where things start creeping up like, well, maybe this is exhausted, and it starts pulling back on itself as well. So there are going to be buyers who are going to be a little skittish up here, maybe taking some profit on this strong close outside of it, or very closely trailing stops up because they don't want to give any of this back. There hasn't even been a bear bar yet, so the first pullback is probably going to get bought realistically. So I don't think buyers really have much to worry about yet, and sellers certainly don't have a reason to do anything. So we're just kind of waiting and seeing if it wants to keep going a little bit further up. They do make a new high, but it immediately backs off. And this is where things get really interesting because notice where it closed. It closed back inside that spike and channel. We tried closing out, and it closed back in. So we can see this was overextensive play. I'm not saying that this is the top and we're going to collapse, but we are probably getting closer to the high of day than we are to the low of day with these buyers taking profit, or at least the morning session. Now, will sellers come in underneath this? It's a really strong bear bar. Technically, I guess from the low, it's a second sell, but man, I don't know of any seller in their right mind that would want to take that other than maybe looking for a scalp. There's too much bullish pressure. If anything, a lot of times when you're waiting for this type of structure, the market participants will wait for it to put in a high and then come in after there's been a proven level, right? We haven't had that yet. This is really just kind of the high that we're sort of waiting for. More likely, like I said, that on this pullback, buyers will buy back in. Now that we're kind of in median pricing, maybe buying towards the low of this spike in channel, but either way, it's more assumed that buyers are still coming in for another leg up. They do get the bounce. Nice push. Not really much has changed. I doubt sellers will have taken that short because that's a really horrible short. But it is there, and I'm sure some traders might have been trapped in on that one. Their stops would likely move down from above that bear bar to above this bull bar, which, if there's enough juice behind the move, might push it up to a new high. But again, knowing what's going on up here, more likely that even if it does get to the high, it's going to be weak because we know that buyers are looking to take profit up there now that they have a confirmed swing. We also have sellers that might be looking to try shorting up here, trying to pick off the high a day. They do break out above the highs. Nice bull bar, but weak bull body, closing way down on itself. So we did have that breakout move, but the failure to close above the high tells a really big story. They're also trying to break outside of this spike in channel, which notably that previous bull bar stayed inside of. We're trying to get outside of that now and climb further up. But we already picked up on the fact that this was overextensive over here. So now that buyers are trying to come up again, it's even less likely. That's a way, way harder situation to go into. Now, this is where things get really interesting because this is where buyers are very likely going to either catch the move before it goes absolutely nuts or they're going to get trapped. You have an inside bull bar. Sellers tried coming in twice, although that first selling opportunity on the bear bar was pretty horrible. We do have sellers that have come in a couple times. We know they're trying to potentially put in a high, and the buyers might be a little bit overextensive to the upside. Buyers will be looking to buy this for a breakout. You can kind of feel that pent-up energy. But if that buy move fails, that's when the buyers are going to start stepping aside because the risk reward is phenomenal here. They can get in above this small little inside bar. They can put their stop underneath the lows, and they can target 2, 3 to 1. You've seen those breakouts happen over and over, especially on the NASDAQ. The trigger's in the buyers, and it falls flat on its face. Now, this is something where a lot of buyers might still try to hold on to it because notice where it closed. If we extend these lines out a little bit further, we're still inside the bounds of that kind of channel area, right? We're inside of there. So the fact that it's closing inside of that again really kind of gives us an idea that, you know, buyers might not necessarily want to give up on it yet, but if it starts breaking below a bear bar's low after a trap on the high, nobody's going to be hanging out, and we're probably going to see it slide off in towards the lunchtime session after this first hour has been completed. And they slide off and everybody gives up on it. Now, keep in mind, this market's still bullish. That hasn't changed. Nothing about that has changed. All that's happened is that they trapped buyers at the high. They bought too high and they got ran over. The risk reward for those buyers, which again, by the way, was not bad, it just didn't work, right? Welcome to the markets. But now that we've rolled all the way over, this giant bear bar, this bear bar is that's almost the exact same size as that bull bar that started the day off. We kind of took back most of it. But look where it landed, right? This is where we hit earlier. All of that support, and we know it's support now looking back on it because of all of the continuation and the support of the buyers. I mean, it's obvious they propped it up there. And now we flashed all the way back to it on one big bear bar. Now, this is going to spook a lot of traders, and this is where industrial money starts coming in saying, hey, we'll take it. I want to be a buyer here, but I need to buy 50,000 contracts, and I can't do it at the market, so yeah, stop out, give them to me. I'll take what I can get. And they absorb into this as a washout. Now, if you're not familiar with what a washout is, I have a video on washouts as well that covers kind of the mentality. But that's what they're looking to do is bounce it back up off of that because they've finally gotten a pullback. It's the first time they've pulled back. Now we're probably going to see buyers come in, and then from there we go into the end of the day. Yep, there are the buyers coming in, and we go into the end of the morning session for the first hour. So a very interesting morning. Even though it doesn't look like on the surface much happened, the psychology inside of those candles is incredible. The price action that happened today really was only made up of, what, 3 candles? And then all of this in the middle. But there's so much that happened inside of there that, man, it was almost necessary to do a video today. So that's going to do it for this one. Hopefully you enjoyed it. I know you guys love these candle by candle analysis. Of course, underneath the video, if you have any topics that you want me to cover for you, put those in the comments. The next video might just be your comment. So either way, if you have any questions about it, because I know this can be a very complicating topic, feel free to shoot me an email, jhb@ssftg.com. Until the next one, though, have a good one. I hope you had a great day of trading today, and we'll see you all then. Thanks.